roundtable is a 1-hour session that pertains to Indian gold bullion market, the issues, the challenges, the opportunities and the way forward. Over to Mr. Rajesh Garu.
Ladies first, you're on the hot seat just now. There's been this, we've seen you now as LBMA being extremely patient with us. We saw you last year in Goa. You're coming back again this year. And clearly, I think we're seeing the beginning of serious interest by the LBMA as to how it can assist the Indian industry. This is an industry debate, not necessarily a refiner or a bullion merchant or a jeweler or whatever. So, question to you is, how on earth are you going to bridge this divide between the international world and Indian norms? How would you suggest that you would go about doing it?
I think it is similar to what I said before. I think ultimately there needs to be more dialogue. And I think from our side as LBMA, my presence here last year and this year, we're hoping for more, and the presence of my team. I've got Sakila Mirza, and Neil Harvey, Good Delivery in the audience. We're trying to have a more ongoing engagement with the Indian market. But it's a bit, as I said, we can't do all the work for you. It has to be a solution that works for India. And we're happy to help guide as we can, but ultimately we can't provide all the solutions. So what I would ask is hopefully a way to meet us halfway. How can we have more of a dialogue on an ongoing basis? And India also taking a seat at that global table.
Srina, what's your take on that? As the federation, which is obviously concerned with standards when it comes to the key raw materials that you use, is this something that you would encourage, or do you think there are some things we can really do on our own?
We are facing this challenge of the raw material, and the outcome today what we are getting, especially the duplication of bars, is huge. This has to be seriously looked into it. How should we overcome on this particular issue is a big challenging thing. We have to come to certain kind of conclusion how the bar should be stamped, and whether the bar stamp is mentioned in the invoice and it is carried further. This is the biggest challenge to the entire industry today. Once the bar is out, we are so confused which is the real bar and which is the duplicate bar. So this is the major challenge to the entire industry today. Apart from the all other challenges what we are facing, this has to be sorted out. And the kind of mints what MMTC PAMP is doing it, I think this could be one of the good options. So I think we should take it ahead and come to one sort of conclusion.
Raghav, as amongst the leading bullion importing banks in the country, how do you see the roadmap for getting together a standard or a set of standards which enables us to become a global rather than confine ourselves within the boundaries of India? How would you, as a leading bullion bank, see that? How significant do you think is this exercise towards taking India to global standards as distinct from standards that we currently practice?
As regards standards are there regarding the LBMA, we don't feel it's a big issue, but there is one big issue which I'd like to request to look into that. In India, there are a lot of refineries. A lot of refineries can be acted as a LBMA. Other challenges which you put it can be easily covered. One of the biggest challenges what you are having, you put the net worth should be like that. It's okay. But in India, if there is any family concern, we are in the habit, or it's very logical also, we take the unsecured loans from the family members or the relatives. As per the banking norms also, the amount which has been taken as an unsecured loan, on the long-term loan, it is taken as a part of our net worth. And accordingly, we get the loans from the banks. So similarly, one of my requests that LBMA should incorporate or should amend little policy if there is a long unsecured loans are there and we match to the net worth required by the LBMA requirement, it should be acceptable. And I think it is totally cover up your challenge. This is one of the biggest challenges that we are facing, and lot of refiners, which are the middle sector refiners, very well acceptable. They can meet out in all challenges. This is one of the biggest challenges which I would request you to kindly look into.
From a banking perspective, how do you see this?
Standards are something that I am very quickly to talk about. But the way I see it, I think Indian market has a couple of characteristics which sort of feed into this bit about standards. One is that as a banker I feel that this is a very undercapitalized sector and large parts of it are outside the common system. So while there is capital, it is not formally in the system. And that leads to underinvestment in standards, which therefore reflects in the challenge that you mentioned. The second bit I would feel is that large sections of the funding side of the business are actually out of the business, so to say, jewelry and gold chain. Globally, if you look at it, there are large banks that participate in commodities. Structurally, regulatory, for various reasons, special interest groups, whatever you might want to call it. But banks are not part of as large funding agents. Chain of bullion in an end-to-end fashion. There is no large Indian bullion bank. So it's a very funny thing that the sector relies heavily on bank funding, but that bank funding comes only in way of rupee funding and not in terms of metal funding.
So
it cannot come in that
if
way.
I understand you correctly, and forgive me for interjecting, what you're saying is when you're looking at this, steering this transformation, spare a thought for the banks and the role banks will play in this. Banks have problems that are peculiar to banks as distinct from problems of the industry. Pradeep, and that's Mr. Pradeep Nagwal. As a refiner, what's your take?
My take on standards is just picking up from where Carlo just mentioned that as an industry, the refining industry is just born in India, I would say. Formal refining, large refining. And we are significantly underinvested in terms of standards. So there definitely is a requirement or a need to have standards which, if adopted from LBMA or if you want to be an LBMA refiner, then you need to have standards of that kind of quality where responsible gold sourcing becomes one of the most important factors, determining the standard itself.
So if I can kind of summarize what you're saying is, it's good. We should look towards integrating with the global community. There may be a little bit of pain, and maybe initially we may not fully comply with all those norms in terms of capital assets, but the key ingredient in that is sourcing and consistency in purity and proficiency testing. These are things you need to be comfortable with.
Absolutely. I mean, that's where you will thrive as an industry for a long term, which would also probably give a lot of comfort to the banks who want to fund us.
May, June, July, total of 60 tons, including bullion and gold content in Europe. Very good council, right? Or shall I say, are you thinking of abandoning the country because it's no longer interested in gold?
We represent the industry. The industry leads the country, we are not related.
Perfect.
But in a sense, we are not worried because the standards are strong reasons. But we are concerned about the non-alignment of interests, like you said. I think we see quite a lot of things happening around the world, and we also see what's happening in India. We see quite a gap between the role we want to play and the role we want to play.
कैमरा उठा के उधर ले जा
That's definitely not in the interest of the country or the industry, such a large industry. We still don't know whose interest is protecting, not we as well, but council, I'm saying, as an industry. The same question, I go back to your first question, when we say standards, anything we talk about in review, whose interests are we protecting? Have we first defined that? We have not defined that. It is not, a refiner is not refining for his own sake. So we got to look at everything about the consumers at the end of the day and then see what we need to do. As far as the demand is concerned, it is, we just released the GDP, right? It's quite a big drop for the second quarter. It has been for the first half of the really difficult quarter, both India and China. But overall, it looks up because of ETF environment. We believe it will come around, but what we are concerned, as I said, is it going to be the same game going to be replayed, or is the industry really going to transition to the new compliance norms very smoothly?
I just add to Som's comments, and maybe I'll be a bit more forceful. I think we're in a very difficult situation right now as an industry in India. This is probably one of the worst situations I have seen in the industry in the last 20 years. We're right now in a situation that the industry is as fragmented as it's ever been. This conference used to have a wide participation and acceptance across the industry. What you have now is 5 different conferences taking place within a month. It's just an illustration of how badly the industry has fallen apart in the last year. The need of the hour is for the different interest groups to come together. And what you have to look at, we have the benefit of Ruth over here. We should be looking at the LBA and seeing that as a possible model. They don't represent one interest group in terms of refineries or banks or bar traders or whoever. They represent the industry. And to expect the World Council to do this job or to a group of refiners to do it is just not right. And the fact that we've come to this situation, all of us being so involved, is really pathetic.
Okay, so you're saying that, hey guys, get united.
Mr. Khosla,
Yes.
when you talk about the imports 60 tons, don't you feel what's happening in the industry today? There is a lot of other gold coming in the industry today. The smuggled gold. That is one part. And the other part, the customer today has totally forgotten jewelry for various reasons. Now, how to weigh this up? What are the various reasons? How to motivate the customers? What is the roadmap? Is a very interesting thing which we have to really concentrate and discuss on this.
Josh, a few thoughts on this. If you look historically at the pattern of gold imports into India, June and July and August, have been months where the imports have consistently fallen as compared to the remaining months of the year. However, they have never fallen to the levels we are seeing today. And that begs the question that is the consumer not interested in jewelry? The consumer is actually still interested in jewelry, it's just found another way of getting it. So the basic psyche of the consumer and the love of the Indian consumer for gold and jewelry, we say, it's in your DNA, you can't go away from it. I believe that's there. I believe it is still being met. Perhaps not being met by channels that we have traditionally been used to. And perhaps there is inadvertently an environment that's been created which encourages use of the unofficial channel. And we will debate that as we go a little further into this. Prithviraj, I need to ask you this one. Gold is consistently trading at a discount. You look at the IIGC, which announces gold prices, and you look at the international price and apply the customs duty and so on, and you find that even the IIGC talks about gold trading at about 1,000 rupees effective discount, which means if you look at customs duty, gold is really trading at a 5% customs duty and not a 10% customs duty. So how do you see this thing developing?
Yeah, basically in the last 3 or 4 months after the budget, a lot of changes is there. There also the uncertainty in the market. I think the basic thing is only the excise.
So you think it's one act that has resulted in the entire industry? And I talk about the industry. I don't talk about jewelers or refiners or merchants. I talk about the industry as a whole. You think that one act has...
No, it's a two, three factors.
factor is there. First, lot of state having control. Second thing, each and every sector in the market, there is a lot of liquidity crisis in the market. The whole industry in India, if you see if any field, the liquidity crisis. And third thing is the price. The international price after couple 2 years, the price moved from 1070 or 1100 to suddenly 1350. And Indian rupees also, the rupee depreciate, as well as also the rupees depreciate. It comes to 32,000. So each and everyone have liquid their position in a cash. And also the major issue is the excise. When the excise comes to, everyone is worried about the policies and how it's coming. So they liquid their stocks at the price, the better the price, and also regulatory issue is there. So they are worried about the issue that they upload in the market. And third, the lot of goods coming from the NBFC banks like Malappuram, so they have almost 250 tons of gold. And they are holding it in a year. So they also upload their stock into the market. So it's all effect there. And also the unorganized sector is also coming in the market. So 2-3 factors involved, so disparity in the market. And IPSA is rate on tradable price on the market. It's not depend on the customer.
So what's your take on Mr. Kothari saying?
Okay, as I said, certainly for the fall in demand is very easy to explain. There is a 7% increase in the rupee price. Jewelers strike largely because of the compliance transitions they are not prepared for. I think that also affected consumer confidence. Big change. And of course, as Mr. Kothari said, we do believe that the rural incomes have really jumped up. That has caused a little bit of a fall. We, as you rightly said, are we concerned? Yes, we were at the end of the survey, the report which will be coming out in the second half on consumers across India and China. One thing that came out clear is that consumers have not changed their attitude at all. In fact, the biggest thing which I can probably read now is the intent to buy amongst youngsters, intent to buy gold is far ahead of the actual purchase. So we have seen that there is a substantial demand. Now, why they are not buying is the biggest reason,
But I think the intent has brought a big smile to Mr. Sridhar. This is good, at least we know that they're going to come back to us. I need to go across to Sharad. Sharad, don't look so worried. You know, it's all right. You only got 60 tons of gold and maybe you moved about 20% or 50% of it, and you've got a lot of people wondering, is the logistics business a good business or not? But hey, you know, you're one amongst all of us, and we are suffering in a similar fashion. So question to you really is, are you looking at reinventing your business? Are you using this time to upgrade your facilities and provide better quality of service and infrastructure? Or are you like most people, locking yourself up in the corner and crying?
Yes, we have been looking at upgrading the facilities, but we have put it on a back burner and we are a little slow on that. Let me be very straight on that. What we have been observing in the market today is that a lot of movements are happening, and it is not happening to us, but our eyes and ears are wide open. We are seeing a lot of so-called organized players who will otherwise bring the organized or the responsible movement. They have moved towards the irresponsible movement. I am proud that we are not into that, but this is definitely a very worrying trend that a lot of organized or the responsible people are moving towards the
So in a sense, what you're saying is, as a logistics provider, I'm kind of sitting on the fence and I'm waiting to see how things develop.
Absolutely. In fact, we do handle a lot of jewelry nationally, but there also we have the challenges. We do not handle which is not right in any manner. So we have challenge on both the fronts, be it a bullion or a jewelry.
So do I hear from you that in a sense you are following responsible gold guidance?
Yes, we are the only responsible jewelry council certified member. and I am proud of it, and we want to be like that for till time at least I am alive.
Let's just move this back to the industry. There's been this huge debate going on gold loans. Bankers have a view, jewelers have a view, refiners also have a view because they're also concerned with loans, but not necessarily in the form of bullion, but in the form of the gold content in the jewelry they get. So there are all kinds of announcements that keep on coming as to what should be done for the gold loan market, what should not be done in the gold loan market. Sunil, as someone who's been perhaps the leading practitioner of gold loans in India, how do you see this entire debate on gold loans?
I guess it's people, each one looking at it from their point of view. The only thing I would say is that, look at best practices in industries around the world. Gold loan product is a standard product which is used by the industry in most of the developed world and the developing world. China is one of the biggest, fastest growing markets for gold loans. And even in China, there have been situations where there's been abuse in terms of the gold loan product, and the regulator is cracking down. But that's part of the evolution of a market, I think. So, gold loan is a very important, very useful product, but it needs to be used properly. And so it's up to the regulator and the industry to be more responsible.
So what you're saying is, don't swing from one extreme of the pendulum to the other. But Mr. Sridhar, as representing the jewelry industry, gold loans are critical for the well-being of the jewelry industry. And there's been a lot of debates that why are you permitting only 90 days, and it should be something like the normal credit lines that are sanctioned to a manufacturer, and in a sense they continue perpetually. So how would you like to see this developing?
See, there is good, there is a little bad as well. Overall, see, at the larger interest, the material loan period should be increased. Considering the present market conditions and present market situations, I know the bankers are very closely monitoring, the bankers are very clearly observing, monitoring all these things. They are quite smart enough as to how to handle. If the period is bit increased, especially it will be really beneficial to the entire industry, and the system can be adopted easily in the larger date, and it can really go ahead.
Can I just toss this back to Mr. Raghav Singhal of ICICI? When you look at gold loans, my understanding is basically you're lending gold, but at the end of the day you're settling it in rupees. When are you going to shift to metal gold loans as are being practiced the world over? Why do you not merely transact and settle in terms of metal? Why do you insist for a settlement in rupees at the end of the loan duration?
I think for a straightforward answer, I can simply point to the regulator and say, look, they are going to get me, I'm happy to do everything. But I think one thing that gets missed out in these debates typically is that when we talk about, I think this point was very much touch raised about the Chinese experience. Misuse happens in many forms, and one of the things that regulators in India are particularly worried about, it's not just credit losses, it's the increasingly so, money laundering provisions.
I just need to bring you back to what I started with, and that is, yes, we look at duration of gold loans, and there are views 90 days, 120, 180, 360. But I'm asking you a question about transacting in metal, settling in metal.
If I were to look at two parts of this,
and why can we not really have metal books? Why can we not have location swaps? Why can we not make life easier? I need your view from a banking perspective.
So, there are two parts to this, I would say. One of those is that I don't think the banking system in India is ready to do it today. Neither is the regulatory environment conducive to this. The simple reason that you had to do this, banks have to trade with this. Trading in two ways is not possible. That's the short and sweet answer.
Rather
But
than
that's
all
also
our
escapist.
problems, forgive me, I
So allow
said
me-
earlier, I would interject.
Allow me to
Breaks your mouth.
finish this one. That's the easy way out to answer this. But the other part of this really is that the market stage at which it is today, I don't think we are ready also to deal in what you call dual currency trading, which is to say that customers can choose the working capital of their choice.
Look, the challenges of integration with the global world are more than just technology. My take on this is that many years ago when the RBI nominated banks to get into the business of gold, I don't think the RBI felt that this was, forgive the expression, just an agency business. I think the RBI looked towards banks and said, guys, will you please integrate your gold banking practices with the way gold is banked and traded globally? And if there is one constant crib I have, and I think most of us on the stage will have, and Sunil's smiling away, I come to you on this one. Why on earth don't we do it? Yes, there are challenges. Yes, there are issues. Yes, I have to fight with the regulator. But I'm not going to allow those to get the better of me. I'm going to continue to fight, and why don't we do it? Sunil, you want to take that one?
I think I agree. I mean, it's just, but the direction should come from RBI. I think the original intent when they opened it up, they wanted the banks to show some initiative. But increasingly over the last 10 years now, RBI is almost pushing the banks to be an agency. They don't want banks to take risks.
And have you sort of fought back and said, listen, I'm not here for this. I'm not here to merely trade bullion and add my 15 cents, 20 cents and give it to the market. I'm here to integrate the way gold is done globally with the way gold is done in India. And the way gold is done globally is in ounces or grams of gold, and currency has no valuation to it.
Let me answer the question directly. We have asked, to just exactly the point you said, we want to go back gold as repayment. We've asked RBI.
Maybe,
No response in 10 years.
you know, when we talk about industry being fragmented, and you just mentioned this thing about, forum, and there are 5 different forums in a short space, everybody's talking their own language. I could sort of point to banks and say, hey guys, you're not any different, you're doing the same thing.
So you said, why don't banks do it?
What I said was, why don't you be more intense in your interactions? Why don't you, you're a bank, you're not the guy on the road. You have a certain position when you interact with the Reserve Bank of India, and they'll never listen the first time. I grant you that. But if you get at it, and get at it, and get at it, hopefully they will listen.
So my question is really, the second part of the answer, was state of the market, and was a little blunt in asking this question. So in the previous regime, there was a bill introduced in the parliament which would have modified the way banks dealt in metal. And the biggest opposition to that came from the gold industry. Now, can someone explain to me why that was? And if you can explain that, then you know the answer to why banks have not been able to do working capital in metal.
Can I leave the bankers with a thought, much though it may be controversial? I believe it's the comfort of convenience, and I'm accusing the banks of the comfort of convenience. Moderator, you're allowed to get away with it. I'm happy to debate it off the forum. There's been initially when there was a concessional duty for import of gold, import of gold bullion, there was this huge concern. Oh my gosh, these refiners are going to take over the entire business. The bullion merchants will go out of business. The banks will go out of business. This is not a fair playing ground. Why are you doing this? Why are you doing that? It's now been slightly over 2 years that we've been dealing with this policy of encouraging refining in India, not at the disadvantage of encouraging bullion import. But when you look back and you see what's really happened over these 2 years, don't you think this was overkill?
I'm totally agree that it's an overpay. जस्ट थिंकिंग अबाउट द गोल्ड, जब गोल्ड उनको दिखता है तो ऐसे लगता है कि कोई RDX की हम लोग वो बेच रहे हैं। हर चीज़ पे रिस्ट्रिक्शन है। इवन यू आर सेलिंग द 2 लाख रुपीज, 2 लाख रुपए में क्या सोना है? आदत पूरा हमारा मॉरल ही टूट जाता है। जैसे हम लोग सोना नहीं बेच रहे, कोई बड़ा गुनाह कर रहे हैं। ब्लैक मनी का इश्यू आता है तो जेमिन ज्वेलरी सेक्टर देखते हैं, कैश इनफ्लो होता है तो बोलते हैं ज्वेलरी सेक्टर से इनफ्लो होता है, बेसिकली स्पेशली फॉर बुलियन। अब बुलियन ऐसा है कि हम लोग किलो बार इंपोर्ट करते हैं, वी आर इंपोर्टिंग किलो बार एंड 100 ग्राम बार। It's come about 2 lakhs rupees. We are totally cashless. So इंडस्ट्री को इतना बदनाम कर दिया है कि लोग उसको सर्वाइव नहीं कर सकते।
चलिए, इंडस्ट्री की तो बदनामी जो है वो है। प्रदीप गर्ग जी, what is your view on this entire debate between import duty on gold vis-a-vis import duty on gold? How do you see this developing? Was it such a huge issue, a huge scare that was being created? Was there a vested interest in it? What's your view?
In my opinion, first, I would like to elaborate about this issue. The difference what it was earlier, it was still okay for the industry. Because most of the industries in India are the cottage industry, with the small scale industry, medium sized industries. We cannot compare the losses in this industry as compared to the large refinery across the world. And earlier, as the banks have made the issue because of the difference in the duty, means refiners are more successful, banks are not in a position to do. I think it was, in my opinion, it was not so big issue. Now, I would rather further go into, if you kindly permit me, to give some more issues with regards to the dowry import, etc. Our question, if we go and do some dowry from any country, everywhere it's not possible, everywhere we can have the formal mines. There is a big industry for the artisan mines, also small scale mines.
The artisan and small scale mining.
Small scale mining across the world is there. Suppose there is any trading house who is in a position who is collecting the gold and who is an aggregator. When we go and ask them, okay, we did the dowry.
So I think the point you're raising is that the regulations for documentation prescribed by customs to avail the concessional duty are onerous, and they need to be relooked, and they need to be made more industry friendly. That's the point. Okay. You have another refiner sitting on your left. I don't know what
allow me to just wait one. Now the same man, we say, okay, give me this document under this condition number 34, give me the minor packing list, etc. First of all, is question that you want to take my secret, it's a which business is there, you want to know where from I am buying from which refiner. Subsequently, if they say your country is very good, let this gold in Singapore, the same gold will go to your country, will be very good. But when your country wants to import the dowry, you are asking so many questions.
So
that itself is a so big trouble for anybody.
Industry needs to interact with government, make the documentation process a little easier.
Much more important. And I tell you,
I have to move to the gentleman on your left because he is also equally concerned with this. You're both colleagues, so you'll have to explain.
As far as this point is concerned, which led from the first point where whether the 1% duty benefit or the 2% duty benefit was overplayed. The way I look at it is, for the government to promote any industry in the country, at first level you will have to incentivize. To attract a quality investment, you will have to give certain incentives to people who want to invest, and which is where government probably decided to give that advantage or incentive, so that a serious investment could be made in that particular sector, and which is what government does in every sector. And rightly so, we
agree with your namesake that the conditions are onerous and they need to be relooked.
Yeah, so that will lead to what I'm saying is leading from that, now that now that there is some serious investment already there in the industry and good amount of dowry is coming, now going forward probably government will have to think, and the industry will have to speak to the regulator and see how we can without basically allowing it to be
Stopper in the...
without being putting any stopper to the raw material or without anybody trying to violate the rules regulations. How can you get more material in that?
I need to come back to you. Let's dwell quickly on some of these new schemes that were launched by government. The sovereign gold bond, the gold monetization scheme, and the India gold coin that we see here. Specifically, let's just touch on the gold monetization. It is fact that the 3 or 4 or 5 tons that we talk about coming in gold monetization scheme is nothing but a temple trust for taking it from one bank to another. So let's keep that out of the system. We are not debating statistics, we are debating the actual working of the gold monetization scheme. If you take that out, I would venture to say that less than 250 kilos has been mobilized under the gold monetization scheme. So in your view, what do you think needs to be done? I have a motive for this, and I identify this particularly because every gram that comes in via the gold monetization scheme results in workload for the refineries.
Which is good, I guess.
Which is good.
Which is what we have been saying. Monetization scheme. First place, we've had too many meetings. I don't think anything is changing, which is why the results on the ground are not as good as they ought to be. We have taken the Turkey model and done certain things specifically to the Indian scenario, which is not working correctly. Let's be very clear. It's as of now, it is one scheme which is not taken off. It's a good scheme. It requires incentives from the banks. Actually, if I may put it simply, the scheme has to succeed. The Reserve Bank has to conduct a program like this, with all the bankers sitting clearly talking. It also probably resolves some of the
It again
questions.
boils down to the fact that these are bankers who are supposed to have nice relationships with the RBI when it comes to gold, because the RBI nominated them to be official importers of gold. So constantly the refrain is, what can I do? The RBI is not doing this.
Yeah, it's the funny thing is that it's substance over form. The form has been met, substance has not been met for various reasons, and many of us know what the reasons are. I'll give you one simple example of the 3. Indian gold coin. Good, bad, it's a different thing. We have some recommendations on that as well. It is still not available other than in 40 outlets of one Indian bank. And there is no pressure to use the gold.
Are you saying that a lot of this is lip service?
I wouldn't say it is lip service with an intent. I think
Not interested.
I have a feeling that banks are not there.
I remember a dialogue with Sunil some time back, and Sunil said, I don't know why everybody is worried. You give me all the gold you get up in GMS and I will deploy it usefully. Are you still on that one, Sunil?
Absolutely.
And none of the banks have taken you up on this? They've cost RBI in front of you.
When we are in the meeting with the Ministry of Finance, I think Saktikanta Das has told everybody, I think most of them are there. तो वहाँ पे क्वेश्चन हो गया तो बैंक कह रहे थे कि हमें तो सर इसमें कुछ फायदा ही नहीं है 30 ग्राम के लिए अकाउंट ओपन करने का प्योरिटी रिस्क करने का तो हम क्यों करें Then the question state bank GM is asked to the Ministry of Finance.
Forgive me, I've got a few questions, but I just want to interrupt and say that
मैं उसी के ऊपर आ रहा हूँ कि गोल्ड मॉनिटरी स्कीम क्यों नहीं जाएगी। देखिए जब VDS स्कीम के टाइम पे RBI ने अलाउ किया था कि 1999 कि आप गोल्ड डिपॉजिट कीजिए, इवन मैं से जमा किया, रिसीप्ट लेके आ गया, इनको दे दिया, हो गया। अब हम जाते हैं बैंक को कहते हैं कि मैं आपको 5 किलो गोल्ड डिपॉजिट दे देता हूँ और फिर उसके बाद में आप डिवाइड कीजिए 50 ग्राम 100 ग्राम, तो बोले ऐसा नहीं होगा। कोई भी स्कीम अगर आप ज्वेलर्स के रूप में इम्प्लीमेंट नहीं करते हो तो स्कीम कभी भी सक्सेस नहीं हो सकती।
toss this into Mr. Sridhar's court, to Sridhar's court, forgive me. How can we get the jewelers steering the GMS? Because clearly the banks have far too many excuses. So I'm hoping the jewelers will have less.
Constantly saying on this, even in the last discussion we said, it was very clear, the concentration on jewelers if this scheme is successful, it can be successful only through jewelers. Otherwise, this scheme cannot be successful. GGF had a full module of the scheme as to how it is to work. Ashok Minawala has done a great thing. If the jeweler is intensified, the jeweler will put a separate desk on his store. And he will welcome the GMS. He will educate each and every single customer. This is what the GMS is. Today, most of the consumers, most of the customers doesn't know what exactly GMS is. If the jeweler is giving a very, very minimal incentive, the jeweler will be very, very instrumental in doing this and making the scheme very, very successful. Otherwise, this scheme will lay as it is. This scheme will not roll front. This has to be looked at very seriously. I know Mr. Kusla, you are real witness to this, and you should really look into it and take it how it is. And once this is done, the jeweler should immediately get through.
That is the way forward. I need to slightly wrap this up. I've got a few questions from the audience. But Ruth, I'm sorry to have neglected you in this entire debate. But the purpose of the exercise was for you sitting far away in London to get an overall feeling of what are issues that are actually concerning you. And when we talk about the integration between India and the world and vice versa, we need to look at the full canvas, of which standards is one, responsible practices is another. But as you can see, there are a lot of other issues that may need to be addressed. What's your take on that question?
I guess it's just an advice that you talk about the divide and the separation between, but you're not looking to leap across that in one single bound. It's one step at a time. And I guess some of the things I would say is that as we look at things, don't look to reinvent the wheel unnecessarily. There's enough work to do without reinventing every aspect. Look where you can add value, and look where it adds value to your business.
So I'll take a few questions that have come from the audience. The first one is for you, Mr. Sunil Kashyap. Someone is saying, it's good for you to say come together, like the Airbnb is an integrating force. But industry is fragmented. Why do you think industry is fragmented? This is the question from someone in the audience.
I mean, there's a question that may not be. So no, I just want to understand. Is the question saying, is the questioner questioning whether there is fragmentation or not?
No, the questioner
is
is
why there's fragmentation. Oh, it's because what you have is you have interest groups who are just looking at their particular segment of the industry and saying, how can I make my interests, how can I take care of my interests rather than looking at the bigger picture. And I think the solution there is to have a body above all these interest groups, which is a body not necessarily from or represented by these interest groups, but something over that, something like an LBMA, where you have professional executives who then take feedback from the market and then go and represent the regulators or represent the government and say we want change. So you have a very professional way of addressing issues, just like Ruth has done. So that's where I think
okay. There's another question. This one apparently is addressed to the entire panel. And the question is, can we cut down customs duty to 5% and collect the balance as excise duty? Mr. Sridhar.
See, the biggest problem what we are facing today, the 1% VAT. So many places it is so happening because of 1% and probably because of the pandemic. The customers are moving to unorganized sector. It's a good option that if it is brought down to 5%, it's a very good thing. Everything, all the smuggling, everything will be sorted out. But in case if this has been raised, the entire business will go to unorganized sector.
6 to 7% on GST excise, GST side.
यहाँ तो सवाल है कि कस्टम्स ड्यूटी आप 5% कर दीजिए और 5% आप एक्साइज ड्यूटी लगा दीजिए, उसके बारे में आप क्या कहते हैं?
the 5% करने से काफी फायदा होगा because of the lots of smuggling are happening in the small sector. Unorganized sector. It's too tough 5%. गवर्नमेंट समझने को तैयार नहीं है कि 5% किसको कहते हैं. Even we are doing business either $1 or $1.5.
The government sitting here in the audience. So what's your take on that?
Yeah, we've always maintained this. If you put an entry load of 10% on a mutual fund, I don't know how many people will invest. Okay, so gold has to be seen as a currency here. It's not an industrial commodity. Anyway, excise duty is going to go away now. It's going to be GST in the next so 5 may be possible. Now our point is it should be below 80% total GST plus customs.
This brings me to another question that came up. Why is gold selling at a discount of 2 to 4% for the last 3 months when banks are buying continuously? Why are you buying gold?
I don't know who sells this fiction now, but clearly, I mean, I'm always amazed at this price differential. 3 lakh crore industry, less than 300 crore capex, which basically means that somebody is going to take the hit if you want to sell below price.
Absolutely.
2% and even 1% of 3 lakh crores is 3,000 crores. So $500 million, when the capital invested every year is less than $100 million, I don't know who's funding this loss.
Okay, so what you're saying is
Your guess is as good as mine.
banks are not buying gold.
I don't think banks are permitted to buy and hold gold. We are simply, like you said, we are lazy bankers who love to just make our buck. It's the best business to be in life. So there you are.
So
I don't know who's funding this loss.
Here's a slightly technical question that's come up. I don't know which one of you are going to answer this. It says the BIS standard insists on a BIS mark as well as a serial number on gold. Why does the bullion and the jewelry trade oppose this? Does the trade oppose it? The question is, is it being opposed? I don't know. Is there a perception that it is being opposed? I think the panel believes it's not being opposed, whoever asked that question. Then there's another one which is, oh my gosh, I don't know what to do with this one. This is for the two refiners. What is the honest truth about Dore imports? Answer it whichever way you like. That's the question.
One thing as far as Sacha is concerned, basically whatever Dore is coming, although there are a lot of constraints, as there are the formal miners are there, they are issued with all the LBMA members, and they are not much in India, except few. Another story which is coming, it's coming from the, you can say, from the small scale mines, which is coming over there. I don't think there is any issue.
You don't think there is an issue. So Pradeep Nagore, what's your take on this?
We are
Dore की सच्चाई बताइए आप.
सच्चाई तो जो है वो है.
क्या मतलब?
We want to be a LBMA good delivery refinery, so we are following responsible gold sourcing guidelines. So we are absolutely importing what is permitted under that. So nothing beyond that for us at least.
Okay, listen. I can only answer from an MLTC perspective. And since the day we started our refinery, we have consistently maintained practices that we follow in Switzerland. We did not dilute a single practice merely because there was a refinery located in India. And therefore, as in the case of tank in Switzerland, we only deal with large and medium scale gold mining companies. Most of them are publicly listed. The accounts are auditable. We undertake a site visit at least once a year to every mining company in the world from where we source gold. We update our responsible gold compliance. We have been audited now for the 3rd year in succession by an independent auditor appointed by the LBMA for our practices of supply chain and responsible gold. So insofar as concerned, the truth about Dore is that Dore comes only from mining companies that are willing to hold their hand up and say, we are a good mining company, you want to come and audit me, feel free to do so.
As you mentioned about the truth, let me explain a little bit more elaborately. The condition which is put by this custom notification 12/2012, the shipment should be from the country of origin. It's a social, I need your attention a little bit. Now, if you take out the overall scenario of the world, little bit dicey can be taken as a Ghana. Other than Ghana, whether it's coming from Peru, it's coming from Chile, all is the gold perfected because it's not possible from here and there gold can go there. Only little bit you can say the dicey can be because it's nearer to India, that's the Ghana case. Other than Ghana, I can tell you very surely, all is a proper gold and all is a responsible.
Ricky, are you inadvertently suggesting that what comes from Ghana is not kosher?
What I want to tell you, I just want to explain to you.
But what comes from Peru and Chile and Colombia is fine? Is that what you're saying?
I object, I'm saying like that. I just saying Ghana can be little dicey.
Somebody got the answer they were looking for.
No, Mr. Khosa, I want to tell you further clarify. Ghana can be little bit dicey, but other than Ghana, nothing can be dicey. This is the president you ask the truth, this is the, in my opinion, this is the correct.
There's one last question, there's too many, but I need to close, we're way beyond time. How will GST affect the entire gold supply chain? From the refiner, to the bullion bank, to the bullion merchant, to the jeweler, and ultimately to the consumer. I'll start with you, Mr. Sridhar.
It's too early to say, give a good comment on this. Whatever I give it will be. Overall, I see it's a good thing, but provided the proper policies implemented, proper amendments to be done to each and every movement of goods. If these are maintained properly and if the GST is limited to maximum 2%, I feel that this is a very good move.
You say GST is good provided condition A, condition B. That's the jeweler's perspective, the Sridharji from a bullion merchant perspective.
देखिए, जहाँ तक हमने अभी तक जीएसटी को पढ़ा है, समझा है, जीएसटी आने से बाद में पूरा ज्वेलरी बिजनेस को इफेक्ट हो जाएगा, बुलियन बिजनेस। अगर आपकी सपोज ब्रांचेज है, सपोज आप गुजरात में आपकी ब्रांचेज है, तो आप गुजरात से महाराष्ट्र में आपको शिफ्ट करना है तो आप नहीं कर सकते, क्योंकि वहाँ पे आपको जीएसटी पे करनी पड़ेगी, उसका आपको रिफंड देना पड़ेगा, और महाराष्ट्र में आपको बेचोगे उसके ऊपर आपको क्लेम करना। तो आप 18% या 12% जो भी आए, तो आप वहाँ पे पे करोगे और रिफंड लोगे, आपको एक साइड राइट साइड लग जाएगा, तो आप कैसे बिजनेस कर सकते?
तो कॉन्सेप्ट ऑफ जीएसटी ठीक नहीं है कि उसकी इम्प्लीमेंटेशन सही
नहीं, उसकी इम्प्लीमेंटेशन सही नहीं है। अगर आप 16% लेते हो तो यार तो रिफंड इमीडिएट।
Sharan, as a logistics person, how is GST going to impact you?
I think if GST again plays the ball where the rules, it's going to be in the interest of the benefit of all concerned and everybody will go. This is what I think. And this stands true for all commodities, all categories.
Raghav, as a banker, a big bullion banker, how do you think GST is going to impact you?
So I'm very happy. This is one thing nobody can blame on banks.
We're not blaming you as yet.
Including
Brexit, very patient.
No, I'm sure even Brexit gets blamed on UK banks, but this one, I think it's nailed it actually. That the joys of GST can be immense for the industry. I think over a period of time, people will see formalization. We will see a lot more, and I come back to the first point you raised, which is standardization. I think in the long run you will see standards. Because when you pay 18% or 10% or 2%, I don't know what the rate is, input tax credit is dependent on value addition end of the day. And at some stage of the entire value chain is covered, I think it will lead to improvement standards.
But in principle, as a banker, you welcome the concept of GST.
Well, Kudari said something about implementation.
Concern is implementation.
So let me give you a small gem. GST calls for registration in each place you are in. State Bank of India, HDFC and ICICI Bank have nearly 40,000 branches put together. I don't know how we will find 40,000 locations tax, but I think they are working on it. That was a light note. On a serious note, these are teething problems for everything. You will recall Mr. Khosla meeting in September of 2015. We are wondering what happened to gold bonds. Last issue started 1,000 crores deal. So some things will become slow. We have to have faith.
So we should all actually be hopeful. As foreign bank in India, what's your take on GST? Limited to your bullion operations, I'm not looking at anything else.
We operate around the world, and most of the developed world has GST, VAT, consumption tax, and things like that. So I think it's just part of the new sort of environment, the economic environment that the industry here also has to get used to. It will take some time to adjust, but I think you should look at it as a step towards a situation that maybe you will get import duties down to 0%, which is in line with what happens around the world.
I know you have a slightly academic interest on this one, but what's your take on this whole thing related to GST?
GST in principle is governments are talking about revenue neutral, so it's not about collecting more taxes. It's about transparency. That's all they're saying, because across the chain now, it will be difficult for people to evade tax because somebody else along the chain would have paid the tax and claimed the input tax. So that's the whole point. I think as far as this industry is concerned, personally I doubt because in a whole journey, there's not much of other products and services you're using. So unless the industry adapts itself to it, it will continue to be what it is today.
Last but not least, and this is to quote the refinery partner sitting here, how do you view the introduction of GST in your business of sourcing doré, refining doré, and delivering the refined output to a bullion merchant? How do you think it's going to impact the way you do your business?
I think it's going to positively impact only. I'm looking forward for GST because for us, when the entire chain is under one tax, right from import until distribution, it's good for us, good for collecting scrap. So I'm really looking forward.
Devji, last word with you.
You agree with me?
You agree with it. Fine, so we're in an agreement on something. Thank you very much to the audience for being so patient and listening to this. Thank you very much all the panelists for bearing with me for a little over an hour. I have to say I enjoyed it. I hope you enjoyed it too. Thank you.
This has been a fabulously interactive session. The SMS number that we had displayed to you, let me tell you that we received over 15 queries on that SMS. We received quite a few comments, on via SMS as well. So I think it's been a very, very interactive session. We've tried to keep it as democratic as possible. Starting first with, let's have a memento for Ms. Ruth Crawford. Inviting up next, Mr. P.R. Somasundaram. The very impassioned views shared by Mr. Pradeep Garg, Mr. Pradeep Nagori, Mr. Sharad Jogokulkar, Mr. Rahul Singhal, Mr. G.P. Sridhar, उनके साथ ही अपने विचार बहुत खूबसूरती से व्यक्त करने के लिए Mr. पृथ्वीराज Gupta, Mr. David Gordon, and present a memento to Mr. Rajesh Khosla.